Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Joining us now is Geoffrey Lunt, Head of Asia Investment Specialist at HSBC Asset Management, joining us from our studios in Hong Kong. Nice of you to drop by. I think we've got to start with the situation in China. That the PMI data that we had over the weekend was fairly concerning. I think we're in contraction at the manufacturing level for a fourth straight month. Are you concerned about the government falling short of that 5% growth target?
I'm not sure that we ever really were very confident of an immediate bounce back of the Chinese economy. So I don't think that this adds extra significant information to our view, which was always that we would need another couple of quarters for the economy really to find its feet again.
Does it do more in terms of applying pressure on Beijing to add stimulus to the equation?
I think it probably does, yes, at the margin. I think that was what we were expecting. It was quite possibly what the authorities were expecting in China as well, and therefore we do expect further stimulus, and we would expect there to be further measures taken to cushion those parts of the economy which need the most help.
It wasn't just the PMI data that was a little disappointing. The latest housing sales figures also indicating that slump in residential real estate is deepening a bit. Is that the key if you're going to solve the problem with weak sentiment in China? Is the property market continuing to be the eye of the storm here?
Yes, I think that's absolutely right, Doug. That is the source of the issues that we've seen. I think it's symptomatic of an economy that's reaching a level of maturity, which means that some of these areas of overinvestment need some recalibration, and therefore it is part of the solution as well to really put that part of the economy back on an even footing. And encouragingly we are seeing signs of significant stimulus in that part of the economy, and we expect that to continue.
We had a story at the top here about talking about increased American tariffs on Chinese-made goods for the American market, obviously. The fact that maybe we can see those new tariffs in effect sooner rather than later. The issue of tariffs here and the way in which it enters the conversation around geopolitical risk, where does that land in terms of a hierarchy in the way you think about putting money to work in China?
Well, I think that the first thing to say is that many of the companies in China that are exposed to that type of issue have taken significant mitigating action in order to this is not a new thing for Chinese companies in respect to particularly exports to the United States. So a lot of them are very self-contained in terms of their revenues within China. In many ways, they don't need to export too much to the United States to remain highly profitable and also highly creditworthy as well. The other thing, I was following your conversation beforehand. I was just speaking to my colleague about the fact that I was in Hong Kong at the weekend trying to buy a car. And by far the most impressive in our view was, and this is a personal view, is were the Chinese makes of electric vehicle. They really are stand out in terms of quality and price. And from that point of view, maybe it's not surprising that other parts of the world want to make those more expensive in their domestic market. So I think that this is something that Chinese exporters, particularly in the EV area, can compete with.
So even though you give those vehicles an A+ rating, I mean, can we still talk about the fact that it seems to be an overcapacity problem, particularly in EV production?
Well, I think, obviously we've seen some news this morning in that respect. I think that's inevitable in terms of the ebb and flow of this of a new type of market. There will be periods of over exuberance, over investment, but it isn't as if the world doesn't need more EVs. And so, from that point of view, I think that the industry is very well set up for the future. The
other story that we were talking about earlier, the fact that China is threatening severe economic retaliation against Japan if the Japanese government further restricts sales and servicing of some of that advanced chip-making equipment. Obviously, this would complicate what the U.S. is trying to achieve in cutting off China from that advanced technology. To what extent is China being held back right now on the technological front with these export controls that the U.S. has initiated?
I think that, again, this is not something that has come as a great surprise to Chinese business and industry, and therefore there are significant ways in which the economy can cope with these sorts of retaliatory measures or new tariffs which are coming in from other parts of the world. So I don't think that this is something which is it's obviously an enduring issue. It's one that's not going to go away, but it is part now of the landscape, I think, for analysts of Chinese stocks and markets. And it's something which is, as I say, it doesn't come as a great surprise to us.
So with that level of transparency, you seem pretty sanguine when it comes to China. Are you putting new money to work there?
Well, That's a very interesting question, because I wouldn't want to underestimate the challenges that the Chinese economy faces. I think that the most important challenges, though, are those which we started with, which are really concerned with the domestic situation and the need for a bottom to be put into the real estate market. From that perspective, we are. As I mentioned, we don't think there's going to be an immediate turnaround, and so it's a stock picker's market. I mean, you have to remember that the Chinese economy is the second largest in the world. It's probably also one of the most innovative, one of the least correlated of any in the world. And you can see by the alpha that portfolio managers make in Chinese portfolios that there clearly are opportunities there. But as I say, it's a stock picker's market at the moment. I wouldn't expect any particular outperformance on a benchmark level.
Can we call it cautious optimism? We'll leave it there. Geoffrey, thank you so much. Geoffrey Lunt, Head of Asia Investment Specialist at HSBC Asset Management, joining us from our studios in Hong Kong. Apple will hold its annual fall event on September 9th, and the iPhone 16 lineup will be center stage for sure. This launch may mean some gains in market share for some of Apple's suppliers in Asia. Let's take a closer look now with Stephen Tseng. He's a senior tech analyst for Bloomberg Intelligence, joining us from our studios in Hong Kong. Stephen, thank you so much for being with us. You point out in your latest report that iPhone demand essentially has been stagnant. For 3 years now, unit sales have been nearly flat. Do you think this is going to be a game changer here, this new iPhone?
Well, first of all, thanks for having me. I think for this iPhone 16, we are looking at some moderate upgrade in terms of hardware spec. People are really looking at this new feature about AI, obviously Apple Intelligence, which it could be a game changer, but it's probably a bit too early to say, given that people still need to see what's the actual user experience this new feature may deliver. But certainly there's something to look forward to.
What about what about the suppliers in Asia? How might they benefit from this new phone?
Given that the overall iPhone shipment, as you mentioned earlier, has been relatively stagnant for years, for this year, even though I think people are looking at in terms of supply chain order, we're looking at roughly 10% increase in second half versus last year. But the key driver for the supplier is still more about the order share win mostly, and also the potential spec upgrade. So from that perspective, I think in terms of assemblers, I think the Luxshare probably is the major beneficiary, given that this supplier has been gaining share over the past few years, which is because of Apple's effort to diversify the supply chain. So the supplier like Hon Hai, which is still largest, but then it may suffer a little bit in terms of location. Also, the other one in Taiwan is Pegatron. It used to be number 2 supplier. It may become number 3 this year, given that the share gain of Luxshare. And then in terms of and also on the panel side, the OLED display order share gain by LG Display, which may be made them the winner in terms of order share gain on the display side.
I'm sorry. When I think of the iPhone, I think of the camera and how advanced this device has become, just in terms of what the camera is able to capture, either still photographs or in video. What do we know so far about what we're likely to see with an upgrade to the camera, and the suppliers in Asia, whether they're a lens manufacturer or another component in that camera processing that could benefit from this new iPhone?
Okay, in terms of the upgrade in the camera, I think the focus this year is really about the medium model. I mean, the Pro series. It used to be 12 megapixel, now upgrade to 48. So that's the main story there. As for the top end, it remains the same. So in terms of, because this obviously means the better ASP for the supplier. So the major supplier like Largan, like Sunny Optical, they can both benefit from this. And then obviously going forward, we'll see if there is any further upgrade, but that will be the next year's story.
You made an interesting point. We were talking about the assemblers and how it's incumbent upon Apple to kind of diversify away from Hon Hai. You mentioned Luxshare as one of the big beneficiaries. Do you think we're going to see more of this as time goes on, Apple looking to kind of create greater diversity among its suppliers?
I think that's the general direction. But having said that, Apple does have the tendency to keep only a handful of supplier in certain components, or sometimes even just keep a sole supplier. I think it's better for it to control the quality and the delivery. So, I mean, in the near term, we may not see any major increase in terms of assembler, but then in certain markets, for example, like India, they start working with Tata for the iPhone assembly. So if they're doing a good job, I mean, Tata, if they're doing a good job, then hard to tell. But so far, I think we're still looking at 3 major suppliers in the assembly side.
When it comes to the parts manufacturers, are they at a state right now in terms of their production capacity where they can meet what you think is going to be a little bit of a pickup in demand? Do you think that that's probable, or are we maybe going to have a little too much demand and supply is going to take a while to catch up?
I think in terms of capacity, I don't really see any major issue, given that we're not the overall smartphone obviously become a much more mature market as a whole. So the capacity issue to some extent is probably more about relocation, as the supply chain is trying to cope with the geopolitical tension. So some component supplier might be forced to relocate. But so far, for the like a camera, we don't really see a lot of relocation happening. I think component suppliers still generally cautious because of the
We'll leave it there. Stephen, thank you so much for making time to chat with us. Stephen Tseng, who is Senior Tech Analyst for Bloomberg Intelligence. Peter McGuire joins us. He is the CEO of XM Australia, joining us from Sydney, I believe. Peter, thanks for making time. Before we get into your perspective on the market, give me a sense of what XM Australia does. What kind of business you're in?
Well, good morning, Doug. We're in the retail market as far as currency trading, commodities, and of course stocks. We're rebranding in Australia under trading.com, and we've just sought approval by the SEC in the States, and we've got over 12 million clients globally. So it's a fairly large operation, and 24 hours a day, 5 days a week, the markets trade, and we try and offer that to our clients.
All right, so let's focus a little bit on the currency side. Give me your perspective on what's happening with the Japanese yen. We briefly touched 147 earlier, weakening against the greenback. There are folks saying that maybe we will not get another rate cut, or rate hike, I should say, from the BOJ between now and the end of the year. Are you in that camp?
Well, I think it's probably a 50-50 throw of the coin, and I'm probably still erring that you might get one, but yeah, probably about a 55% probability in my mind, because we've still got 4 months to roll, and I feel as though that what we've seen in the last month was absolutely epic when you've seen what happened as far as yen and, of course, the Nikkei, and I suppose the differential between the rates and what we're seeing as far as the overall picture in Japan. It's been a dynamic market to trade. And if you're looking at trading any market over the last probably 6 to 8 weeks, that yen was just spectacular, from 144 to 162 back to 145. So it really hasn't, it's been the market to trade, really, and it's just been quite extraordinary.
That was very much about the carry trade and the unwind of that position.
Yep.
I mean, you think most of that has been flushed out at this point?
I think so. I don't necessarily, I just want to see where that US dollar trends over the next couple of, well, naturally this week and leading up to the 18th. But there could be a little bit more movement. Maybe that 143, 142 handle, Doug, we might see. It's currently sitting, at that best part of a little bit, 147. It's erring back up, but I still think that there's probably a little bit more movement in the yen in the short term.
So you're referring to the 18th, that's the Fed meeting. Before we get there, we have the employment report at the end of the week. You care to wager a guess on what we might see in terms of non-farm payrolls?
Well, forecasts are looking around about that 165 sort of handle. It's going to be a hard. You've got analysts, Doug. I'm laughing to myself because you've got, everyone's got an opinion. They're like noses, and some people are at 100,000 and some are as high as 208. So it's going to be anywhere between that. I'm going to stick my, a hand up and say between 150 and 165. And we've just got to see how those numbers drop. But you've got other numbers coming out during the week that are, I think, going to weigh on that. Naturally weigh on it, but the expectations, it's either going to be enjoyed by the Fed, or if it's softer than expected, then that's really going to cause, I think, some further concern to Fed Chair Powell and his decision-making process. So
could that necessarily mean 50 basis point cut this month?
I think so. You've got a 35% probability of that happening. And if it's a weaker number than expected, Doug, then that's going to be up the best chance of a 50-50 chance as well. So, yeah, we've got 2 weeks to roll tomorrow till the decision. And, there's a lot of water to pass under the bridge between now and then. You've got today, they've got the PMIs, both non-manufacturing and manufacturing today and Thursday, respectively. Those numbers will drop. So we've just got to see how that is all interpreted by the market also.
So 30% probability that it's a weak employment reading, and then we do get a 50 basis point cut at the September meeting. What does that do to the dollar then under that scenario?
Wow. US dollar index, if I'm looking at the 101.75 sort of handle at the moment, I think it'll probably be in the hundreds, and you might even see a 99, a high 99. I think probably 25 is baked in, but 50 certainly isn't baked in. So I think that would really push that dollar to, quite a bit softer than where it is at the moment. And, you might see, naturally a move across the commodity complex and against all the currencies.
What are your favorite funding currencies these days? If it's not the Japanese yen, are there other currencies that you favor if you're going to carry?
Well, some people like the Swiss franc, of course. But yeah, I think that, it's just been the yen has been the favourite all the way through, and it's just been so dynamic. So I still don't believe that Mrs. Watanabe's jumped off the throne yet. They're still very action-based because of all the cross rates. The yen has been just an extraordinary market to trade. I'm still erring on that one. But remembering when you're offering so many different cross rates that we offer, there's opportunities on every day because, you're looking at that yen pound, yen euro, yen Aussie. It's just been quite extraordinary what we've seen.
Yeah, volatility is your friend in that kind of situation, no doubt about that. Talk to me a little bit about expectations very quickly, Peter, for a move on the part of the Bank of Korea to cut rates as soon as next month.
Oh, look, I wouldn't be surprised for that to happen. And I think that you've also got the other side where you're looking at it, what's happening as far as Eurozone, where does the Bank of Canada play, the banks are starting to cut, and I feel as though Korea will roll through with that. So, yeah, it's probably a fairly, bigger chance than not happening. So that's where we're sitting at the moment as well, as far as keeping an eye across that Asia-Pacific basin and, the mood of central banks in that whole region.
Peter, we'll leave it there. Pleasure to have you on the program. Peter McGuire, Chief Executive Officer at XM Australia. This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.